Barry Silbert, you may know from SecondMarket, but is now a prolific Bitcoin investor, also runs a Bitcoin investment trust, knows if I don't have time to list all of the companies that he's invested in the Bitcoin space. So he really will be able to give us a broad overview of the ecosystem and exactly how it works. Bill Barhydt wears a number of different hats. But Boom Financial, you're the CEO of Boom Financial, and you're very interested in financial inclusion and financial rights, I think, of people. And so he can talk to us a lot about some of these advanced technologies that I referenced at the end of my talk, and also some of the regulatory environment that Bitcoin is facing. So, Barry, why don't we start with you? I've talked about the technology as if it's kind of in a vacuum. Answer this woman's question, though. How do you get Bitcoin? How do you participate in this? What do you do as a consumer? What do you do as a merchant? Describe a little bit how the ecosystem around Bitcoin has evolved and how it works now.
Great. So whenever I have the opportunity to speak in front of audiences, I always ask a question, so some audience participation here. So on the spectrum of Bitcoin believer to Bitcoin skeptic, by a show of hands, who here is a Bitcoin believer? Put your hand up high. As a friendly audience, okay. And then who's a Bitcoin skeptic? Oh, it's probably about half and
really,
half.
after my talk, there's still that many. I'm insulted by that, actually.
So I've asked that question now probably 50 times, and it's actually probably one of the most positive audiences about Bitcoin, and that was that was Bitcoin 101, 201, and 301 in 20 minutes, so that was great. So I think I like to think about kind of the Bitcoin evolution in 5 phases. So Bitcoin started off in 2008 based on this white paper, but 2009 is when the software was released to the public. And for the first couple of years, from 2009 to 2011, Bitcoin, and kind of in this experimentation phase, was really all about kind of technologists and hackers just playing around with the code. There were no businesses, there was no value associated with Bitcoin. In 2011, in the summer, is when there was some press around a site called Silk Road, where you could go to buy drugs or apparently hire hitmen, and that created a lot of media awareness, and the price of Bitcoin went from basically less than $1 to over 30 and then crashed. And that was the start of phase 2, which is the early adopter phase. And in that phase, you saw the creation of the first generation Bitcoin companies that were building basic infrastructure. So basic infrastructure, it's wallets, it's merchant processing, it's mining operations, and it's exchanges. So starting in 2011, you saw first generation getting formed. In 2013, you saw the start of phase 3, which was the venture capital phase. And that was when you saw Mark Andreessen and Fred Wilson and Google Ventures and Benchmark and all these great VC firms start investing in what were kind of typically generation 2 companies. Because generation 1 companies were, kind of, it was the 22-year-old in the basement that didn't know how to necessarily handle the security or the regulatory aspects. So we're right in the middle of this phase 3 right now, and the amount of money flowing to the space is significant, and there's thousands of companies being formed around the world that are getting funding. Phase 4, I believe, is going to start this year, and that's the Wall Street phase. So we're kind of at the early stages of institutional money finding Bitcoin and finding kind of digital currencies as a new asset class, and they're going to start trading it, start investing it, start creating products around it. And then that will lead to phase 5, which is mass global consumer adoption. And in my opinion, though, that phase 5 is not possible until all the companies that have been formed and funded come out with their fantastic new products to make it easier to buy and hold and use Bitcoin. And then really more importantly, the amount of Bitcoin in existence, which at today's price is about $8 billion, it's not large enough to support all the great things that we're talking about, remittance and payments. So the Wall Street money and the liquidity that it'll bring to the table will likely kind of kick off kind of generation or phase 5, which is mass global consumer adoption, which is probably still 12, 24 months away from now.
Okay, but Bill, considering where we are now, how does it work? As a consumer, how do you access Bitcoin? I mean, you can mine them, or you can sell things to earn Bitcoin. What are the exchanges? What are the wallets? How does that work exactly?
Sure. There's several websites where you can go to actually buy Bitcoin today, right? To answer your question directly, even with a credit card or a bank account, you can go to Coinbase or BitPay. Help me out if I'm leaving out the big ones. But basically, you can just enter bank information or credit card, just like provide the same information you would to open up a bank account, more or less, and you end up with a wallet using the the Bob Alice scenario that you described, where you end up with Bitcoin in a wallet's being hosted by someone else. The alternative is you download the open source software on the internet and you participate in the mining process that was also described, and if your computer system is powerful enough, you end up with some Bitcoin as part of the process. So when I was doing this in 2010, or a few months after the software was released, I was able to do this with a MacBook Air, just literally mining Bitcoin, and I would win some by solving that proof of work problem that you described. That's not possible anymore. The Bitcoin network itself is more powerful than the most powerful supercomputer on the planet, so your odds of solving that proof of work problem with a laptop are basically zero. And there are companies that have been funded by venture capital firms to the tunes of tens of millions of dollars specifically to set up large mining pools where they take computers together and solve proof of work problems. And these mining pools are now actually generating most of the Bitcoins. I actually consider this a little bit of a problem with the overall mining model, but I do think it's the best we can do when you're distributing the trust out in the system. So basically there's two ways to get to Bitcoin. The latter you have very little chance of doing now unless you're willing to invest a lot of money. But if you want to basically just buy off the street, as it were, you can do it just more or less the same way you would buy euros on a website.
Or you can start accepting it.
Or, exactly.
Yeah.
Exactly.
And so, you know, I
Sell
think
things for Bitcoin.
Right.
Exactly.
So a growing number of merchants. I think here in the U.S. it's about 60,000 now. Accept. In fact, just this morning, Expedia announced that they're now accepting Bitcoin, which makes it.
And the Dish Network last week.
Dish Network. Yeah. So you know, it's what's interesting is
Overstock.com.
if you use one of the merchant processors, the two largest are Coinbase and BitPay. They absorb the volatility risk for the merchant, and so if a merchant is selling whether it's a plane ticket or a subscription, they get the U.S. dollars if they choose to do so they have no risk. And so from a merchant, it's really, the question is really no longer why accept Bitcoin. The question is really why not accept Bitcoin. Because what that does is it's going to lower their costs relative to credit cards. It's going to potentially open them up to new customers. And three is they have no risk. It's all kind of upside. And so that's why you're seeing these big names accepting it. And I'm an investor in both BitPay and Coinbase, and I have some pretty good visibility into the pipeline of merchants. And it really is the who's who. You're going to see many of the big names, both online and offline, start accepting Bitcoin this year because there's really no downside.
Let me dig in a little bit, just to keep talking about Bitcoin as a system of payments. Where do you see the investment opportunities? Where do you see this sort of phase 4, phase 5? Where do you see it going? And then, Bill, I want to turn to you to talk about kind of non-payment type things after that. But Barry.
Well, the reality is, digital currencies in general is, I believe, a new asset class. And I just saw last night there's now 316 digital currencies that are traded. But Bitcoin itself must represent probably 90 to 95% of the value. So you can and buy the digital currency. I always advise people, if you're excited about Bitcoin, first buy Bitcoin because you're kind of making a play on the index. You're investing in the internet. The challenge, though, is if you want to go beyond that, all of the companies are private right now, and they're all likely at least 12 months, if not longer, away from kind of going public. And so there really are no efficient ways to get involved in the infrastructure beyond just buying Bitcoin. That will change, I think, again in 2015. So if you have access to angel deal flow, if you have access to venture capital firms that are active, that's really kind of your best derivative play.
Although you can actually go to angel.co and do a search on Bitcoin, and you'll probably find 150 companies at various early stages. Some are one person with an idea, and some are companies with tens of millions of dollars in venture capital.
AngelList, right?
Yeah, AngelList, which is angel.co, and you can actually, if you're an accredited investor, or I don't know what the rules are, but you can explain that better. But you are able to, in theory, invest in some cases in these companies. But yeah, it's really hard to get access to some of the companies in the earliest stage right now.
Yeah. But Bill, if we think about the blockchain transformative technology as kind of the TCIP, and the currency, and Bitcoin as a currency, as the HTTP, sort of the first application on top of this infrastructure, what else can you use this infrastructure for? Yeah. This no need for trust, disintermediated, solves a timestamp problem type, and you've done a lot of work with smart contracts. Can you kind of talk us through that and
Sure.
lay out some of the vision?
And I think I would preface this by saying that for the people who are skeptical about Bitcoin, as I'm a computer science guy, so I love skeptics because you help us solve problems. But I would say that I'm not a currency speculator, so I'm really not that interested in just speculating on the value of Bitcoin. I'm really interested in what Bitcoin does as a technology for society.
Okay.
And it didn't create the virtual currency model. Virtual currencies have been around for a very long time. It created a new model of decentralized virtual currencies where there's no central trust authority in the system. And from a technological advancement perspective, that is huge. I mean, every computer scientist I know who's been skeptical about it, I've handed him the software and the white paper, and in 100% of the cases, they've come back to me with an, oh my God, this is unbelievable.
Yeah.
What, I liken it to the Sistine Chapel of cryptography, if you've ever studied cryptography. It's that profound.
True. Yeah.
So the interesting thing about the way the blockchain works that you described is that it's decentralized. It actually uses a model like similar to BitTorrent, hence Bitcoin, to actually distribute the transactions. It uses a peer-to-peer architecture. So I know none of you have ever shared files or music or video on the internet, but if you know anybody who has, it's more or less works the same way. And it's a huge breakthrough that we can actually verify transactions, the same way Visa does in a centralized model with banks, now in a decentralized model, effectively using a music file sharing model. But that opens up huge implications for the future of commerce in general, not just for Bitcoin as a currency. The way Bitcoin works, if you really dig into the ones and zeros, there are implications for around what we call smart property, which is the ability to represent your ownership of property directly on the internet itself using this Bitcoin platform or other competing technologies. Smart contracts, which is the ability to represent your rights, basically nothing different from traditional contracts, but now representing your ownership and the rights of the counterparties to a transaction directly on the blockchain. And so I know of actually startups, some in stealth mode right now, that are actually working on new applications of this blockchain technology specifically to represent rights, property ownership, transactions, digital corporations, and then use the blockchain to actually verify that things actually happen, right? I mean, why do contracts work, right? Because you have observability and verification. Well, with the distributed trust model, you now have a verification directly on the net or on the wire, as we like to say, and that's a big breakthrough. And so look for a lot, and this is interesting because you don't have to wait for the fifth phase. That I agree with what Barry said about the phases and how you get to mass consumer adoption. But for a lot of these short-term applications, right, you can actually use a smart contract to represent derivatives, for example, right? So look for derivatives of virtual currencies themselves in a first step, where the actual future contract can be executed right on the blockchain. And I know that for a fact that there are companies working on this right now where you'll be able to buy puts, calls, futures, et cetera,
Why not,
that settle
right?
right on the blockchain. Why not? I mean, that's exactly the way the protocol was designed to work, to enable these types of transactions. But in a second step, you'll even be able to represent real assets on the blockchain and then have offline processes that integrate. So for example, I can represent gold, I can represent baseball cards, I can represent my rights to a digital file on the blockchain, trade them, and then put processes which can be overseen with gateways in place to really settle those transactions. And on Wall Street, we talk about straight-through processing, and that's been a 20-year kind of transition to that. And we have now the ability to eliminate correspondent banks in the middle of transactions to be able to execute these kind of straight-through processing trades using the blockchain platform.
Right. I mean, you eliminate stock certificates, custodians. Absolutely. You can even eliminate stock markets.
Absolutely.
And if you think about that kind of trading and then verifying who has what capability, a couple of the examples that I've heard of as well is think about sort of Dropbox type storage. If you have excess storage, you can trade and for Bitcoin and give away your excess storage, or buy somebody else's, or Wi-Fi bandwidth. All of these things now can be that are on distributed networks can be traded because there's this verification. So Barry, I'll give you a chance to add to that if you want to, but I also want to turn to you and to talk about a little bit about the regulatory environment that's facing Bitcoin, and give you both a chance to comment on that. Actually, there's been some recent IRS rulings, and are governments just in China, for example, banks are not allowed to associate with Bitcoin. Russia had a kind of a similar ruling. So how do you give us a regulatory landscape, and where do you see that going, both of you?
I think you have to think about regulatory regulation of Bitcoin from a global perspective. And so let's talk about here in the U.S. So here in the U.S., if you had asked me kind of 2 years ago, how the U.S. would react to Bitcoin, I think most people would have said, well, they're never going to allow this to happen. They're going to shut it down. They're going to regulate it out of existence. And quite frankly, the opposite has happened. So at the federal level, the SEC has said it's not a security, we're not going to regulate it. CFTC has said it's not a derivative, we're not going to regulate it. The Fed has said it's not a banking function, we're not going to regulate it. And really the only federal kind of quasi-regulator that is regulating it is FinCEN, which is the Financial Crimes Unit of Treasury. And Jennifer Shasky, who heads up FinCEN, was one of the first ones to come out with guidance about Bitcoin, and she took a very thoughtful, balanced approach and basically said, if you're in the business of transacting in Bitcoin as a business, you have to basically be a money service business. And that kind of put Bitcoin into a very kind of clearly defined regulatory scheme that businesses that could then follow. Then the challenge, though, with that is that at the state level, you also have MSB rules. And 50 states, you have not exactly 50 different sets of rules, but a lot of different rules.
And 5 don't think it's currency.
Right, and so you have some that are saying it's currency, some are saying it's property, some say that we don't know what it is. And so what's happening right now is you have kind of clarity at the federal level, at the state level, what initially looked like to be a fairly kind of draconian, heavy-handed approach to regulation here in New York. Ben Lawsky, head of DFS, which is the state banking regulator, has actually come out quite frankly, as becoming one of the biggest Bitcoin evangelists and promoters because he understands the potential that exists and he wants New York to kind of become the Bitcoin capital of the world. So I think what you'll see over the next 6 months are some collaboration among the states, but there actually is now a competition to make sure that California, Texas, New York, one of them emerges as kind of the Bitcoin capital of the US. Overseas, again, patchwork. China has put out 50 different messages, all conflicting about what they think about Bitcoin. I think generally speaking, people believe that ultimately Bitcoin will be allowed to exist in China. Russia has said some negative things, but then you have countries like Germany and Sweden and Singapore that are actually kind of quite pro Bitcoin. And the IRS ruling that came out a few months ago was actually kind of the last piece of uncertainty that existed here in the US. And the IRS basically said you can get long-term capital gains tax treatment if you hold on to Bitcoin for more than a year, which is great.
And Bill, do you want to add to that at all? Or?
Sure. I think I have a day job which is basically the worst case scenario from a financial regulation perspective. I'm trying to bank the unbanked immigrant population as well as bank their families back home. So I deal with every regulator imaginable. Right, and so one of the beauties of Bitcoin is that you can't actually regulate the idea of Bitcoin. It's physically impossible unless you actually regulate the idea of the internet and TCP/IP itself. And the only way to do that is basically that I could think of would be to put some kind of filter in everyone's house or everyone's phone. And some mysterious overlord, would then have to decide what you could and couldn't do in your life. So the beauty of this decentralized trust model is that unless you shut down the internet, it's just not regulatable. And even in China, where they are actually looking at what consumers themselves can and can't do, the technologists are going to be one step ahead for a very long time with technologies like Tor and other things. So what the regulators ultimately try to do is look at the service providers themselves who are providing services to consumers and businesses, as well as the value of Bitcoin as an asset, as Barry mentioned, and say, okay, what are the appropriate regulations and protections that need to be put in place to oversee the service providers, the same way they oversee Western Union and banks and other service providers and money service businesses and banking regulation. And that's where a lot of work is being done. And I've actually been fairly pleased with and pleasantly surprised, I'll be honest, about the lack of overreach so far and regulators trying to understand what's been going on. I actually expected kind of a bit of a whiplash in multiple directions, and that actually hasn't happened. But I do expect to see money service business regulation clarification from the states, as Barry mentioned in particular, but not geared towards consumers, because there's really no way to stop it. It's going to be geared towards service providers.
And I think if Bitcoin had emerged kind of pre-2008 for the credit crisis, I think actually we would have seen a different reaction in DC. But when I kind of walk the halls, of Congress and talk to the members, the idea, the prospect of Bitcoin saving, Staci went through these hundreds of billions of dollars of fees that are paid right now. A lot of it kind of falls on the poor and the unbanked. or underbanked. And so policymakers in DC are saying, wow, this is actually a fantastic opportunity for us to kind of go after whether it's kind of the Western Union type fees or credit card fees. And so from that perspective, I also have been pleasantly surprised by how they've reacted.
Let
Okay.
me give you an example just to put that in context, what Barry's saying. So there's two ways to do a Bitcoin transaction today, effectively. One you can't regulate, and that is I actually download the software, and I can do it on my Android phone or on my PC, and I store that private key that you mentioned right on my computer. Okay? I, as a consumer, have a right to do that everywhere in the world that I'm aware of. Okay?
And there are people that they take their computer at the end of the day, put it in a vault, lock the vault, take their computer back out, and use their computer for Bitcoin.
Because the key is the equivalent of cash in your pocket, and that's the point I wanted to make, is that if you send money as let's just call it a digital remittance, to somebody else's public key, there is no intermediary to that transaction. There's no Western Union, there's no bank, there's no middleman that's regulated in that transaction. It's impossible for a government to regulate that transaction. What they can regulate is moving in and out of fiat on both sides of the transaction. If you want to buy Bitcoin in order to start the transaction and sell Bitcoin in order to get pesos in Mexico, they can put regulation in place for that because they can control the spigots or the spouts where that happens. The second way to do it is use some website that would actually host your wallets and actually manage effectively your digital money for you. Those parties are now providing a middleman service to you as a consumer, and those parties will eventually be regulated, in my opinion, and using traditional money service business or money transfer regulation.
Right, and it's no coincidence that some of these more financially repressive countries are the ones that are getting a bit more exercised about Bitcoin and what it could mean for them.
They're going to be deathly afraid of this.
They're going to be deathly afraid of this.
The more they understand it, the more they're going to be
The more
afraid
they're not going to like it, right? And you saw when Cyprus instituted capital controls. I mean, capital controls in the euro area, you saw a huge spike in Bitcoin price as people reacted to that. Okay, so we have a minute left, and so I want to ask you both predictions, 5 years out, 10 years out. What will the world look like in a Bitcoin kind of world? So, Barry.
Well, I'll focus on Bitcoin as an asset class. I think the outcome of Bitcoin as an investment is likely binary. It's either going to be zero, or it's going to be probably one of the highest returning investments you're ever going to make, because we're talking about transforming and changing our entire financial system and money. And so the upside of that is significant. Binary, obviously, I'm a believer in Bitcoin, and I think we're going to see the upside, but there is significant risk.
Mm-hmm.
I think in 5 to 10 years, the Bitcoin blockchain technology will be fundamentally integrated into the e-commerce model that we all know and love today, whether it's on smartphones, on traditional web, wearable computing, whatever, Internet of Things, whatever that ultimately becomes, that decentralized blockchain will become fundamental to how we transact. The value of Bitcoin itself, I have no idea, probably minimal interest, except to say that a viable float is necessary for a whole bunch of applications that we want. And one of the, for example, I do think that there's going to be a whole bunch of applications of Bitcoin being used as a reserve currency for either business-to-business transactions, remittance transactions, and that does not, that actually can be transparent to most consumers. And that will actually happen, whether there's mass consumer adoption or not.
Okay. All right, well, thank you very much, gentlemen. We appreciate your station of panel. Yeah, please. Salim, it's your show. You can always ask a question.
I have a very quick question. Do you think that Satoshi Nakamoto knew that he was solving the Byzantine generals' problem?
I think he did, yes.
Okay.
Yes.
And I don't think it was one person. Yeah, but
Okay.
they
It might
knew,
not have-
they knew
it-
what they were doing.
They
Yes.
were there. All
Yeah,
right.
absolutely.
Thank you, Staci. Thank you, panelists. Great discussion.